Okay, so I start recording. I'm not too sure if it works because sometimes in certain classroom, right, when I record, the sound is not being recorded. So therefore, if I try to record and the sound is not recorded, that means the recording will not work then. Okay, so we try first. I never try recording in this classroom itself. Okay, so yeah, let's start. Now, for today's class, we look into this chapter first. Although it is labeled as tutorial 11, ignore this labeling here because like I say, last semester it was the last chapter. But now this is being added back. So therefore, we learn this chapter now because for your assignment purposes. So for this, yeah.
So I want to comprehend that this is the tutorial. This is big time, right?
Yeah, correct. So we cover this topic first, okay? Because you need this for assignment. Now, so for this chapter, we talk about working capital management. You learn about this in the front chapters, in which we learn that net working capital is equal to current asset minus current liabilities, because that refers to the liquid assets, okay, that we use to pay for the day-to-day expenses, okay? So therefore, first of all, let's understand some terms first. So when we talk about working capital, we are referring to the current asset minus current liabilities. That means we are referring to how much of current assets does the business have, okay, to finance the current liabilities, okay? So therefore, when I look into working capital management, okay, I'm referring to the control of the liquid assets like cash, inventory, account receivable, like the customers that purchase goods and services on credit, that owing us money, and also looking into the short-term liabilities that the business will have to pay, okay? So we look into how much liquid assets, okay, to fund our short-term liabilities. So when you look into a business, we can look into it as a cycle of operations. For example, first of all, when you run a business, you need cash. When you have the cash, you need to use it to buy raw materials to produce the goods and services. And all these raw materials will be kept in your inventory in order for you to produce goods and services. Once the goods and services are being produced, you will sell it out to people, okay? Once it is being sold to the customers, maybe you sell to customers on credit. So that means you allow the customers to buy goods and services first and then pay you after a few months, yeah?
Also, this is so they pay you cash and then I'm very confused with this. Can you just
No. Once they produce the goods and services, they can sell to customers on credit, okay? So therefore, the customers can owe you money first. Then after a few months, they will pay you back, collect the money from receivables. Once you collect the money back, you get back your cash. And you can continue, okay? You can continue to buy the raw materials again to produce goods and services and sell it to customers on credit and then collect money from them. So continues like this as a cycle, okay? So why we need to look into this? Because we need to know how fast we can get back the cash for us to buy the raw materials. Yeah, so I need to know how many days that I use to get back the cash from the customers itself in order for me to pay to the suppliers, right? So therefore, we can look into it as a cash conversion cycle more specifically, okay? Now, we start from the raw material purchase to the payment for the raw materials to who? To suppliers, right? We pay to suppliers and then we produce the goods and services and sell it off to customers on credit and we collect the money from the customers. So the whole thing over here is what we call as the operating cycle. Now, I can look into it more specifically. For example, when you look into the period from the raw materials purchase to the sale of goods and services, this period we call as inventory period. Okay, inventory period. Why we call as inventory period? Because all these things, raw materials, stock are in your inventory. So we call as inventory period. Okay, from the period from the sale of goods, okay, to the cash collected on the sales, okay, this period over here we call as account receivable period. That means we look into how many days that you're going to use to collect the money back from the customer's itself. Okay, continually, okay, when you look into the raw materials purchase and the payment to the suppliers, okay, this is what we call as account payable period. Okay, that means we look into how many days that you use to pay off to your suppliers. Okay, and the rest over here we call as cash conversion cycle. Okay, so this one is cash conversion cycle. So therefore, when you look into cash conversion cycle, okay, what does it mean then? So when I look into cash conversion cycle, that means I look into how many days used between the cash payment to the suppliers and the cash receipt from the customers. So I want to know how fast the cash is obtained from the sales itself. Okay, so therefore today we can form some formula. Okay, we can form some formula here. Let me write on over here. So today, if I were to look into the cash conversion cycle, okay, to find out cash conversion cycle, I call it CCC. That means I look into how many days, okay, how many days that I use to pay to my suppliers and how many days that I use to collect the money from the customers. So I would like to look into how many days that I use between these two, okay, between these two. Okay, so therefore, okay, I can use this formula. I can use operating cycle minus accounts payable period to get these figures, or I can use this inventory period plus account receivable, okay, plus account receivable period, and then minus off accounts payable period. So let me write it down here. Okay, cash conversion cycle, I can rewrite into operating cycle, okay, minus off account payable period. Okay, or I can rewrite into inventory period plus account receivable period. Okay, and then minus account payable period. So you have three components here, three information you need to have in order for you to able to calculate the cash conversion cycle itself. Okay, so this is the formula that you need to know. Okay, so now in your tutorial, you only have two questions for today's class. So let's have a look into the second question here first. Okay, so let's have a look into the second question here. Okay, you have this income statement and balance sheet over here with some of the components. Okay, so first of all, now they're asking you to calculate cash conversion cycles. So you will need to have the information on inventory period, receivable period, and accounts payable period. So let's calculate the inventory period first. You have two methods to calculate. One is the formula that I'm going to show you. The other one is the formula that you learned in your chapter 3 when you learn about the ratio analysis. So let's have a look into how to calculate inventory period first. Okay, so you learned this in financial ratio chapter. Yeah. Okay, so first method, you can use this formula. You use average inventory divided by daily cost of goods sold. So average inventory is this one, 619. You put it here. Okay. Daily cost of goods sold. How do we calculate daily cost of goods sold? So that means I use cost of goods sold. This one, cost of goods sold, 5839. Okay. Divided by 365. Okay. That's how you get the daily cost of goods sold, and you get these answers. Okay, or second method is I use the ratio. Yeah, let's just for a while. Second method is to use back the ratio that we learned in financial ratio chapter. Let me. Okay, so you learn this in your ratio chapter. You use 365 days divided by inventory turnover. Okay, so 365 divided by inventory turnover. How do you calculate inventory turnover? You use cost of goods sold divided by inventory. So cost of goods sold divided by inventory is 619. Okay, so you get here the denominator and you get the same answers. So when you put it together, right, you can see these two methods. When you put that in maths, in fraction, right, it's the same methods itself. Okay, it's the same methods for calculation. Okay, now next one, you want to calculate account receivable period. So account receivable period. Okay, so one way is you use account receivable divided by daily sales. So account receivable is here 595. Okay, 595. And then daily sales. How do I get daily sales? Okay, so daily sales, I will use the sales here 6489 divided by 365 days. Okay, you get this number of days. Okay, the second method here is you use the one that we learned earlier. You use 365 days divided by receivable turnover. Okay, so 365. How do you get receivable turnover? Receivable turnover, you use the sales divided by account receivable. Account receivable here is 595. Okay, that's how you get this one to get the same answers. Okay, now how do you calculate the accounts payable period? One method here, you use account payable 460. Okay, 460 divided by daily cost of goods sold. Daily cost of goods sold. So cost of goods sold is 5839 divided by 365 daily. Okay, so you get this amount, then you get this answer. Or you use the financial ratio that we learned earlier, 365 days divided by payable turnover. How do you get payable turnover? You use cost of goods sold 5839, okay, divided by accounts payable. Accounts payable is 460. Okay, get same answers. So you will have the information ready. You will have the information for the number of days for the average inventory period, number of days for the account receivable period, and number of days for accounts payable period. So three information here already. Now we can calculate the cash conversion cycle. Okay, so we put that into the formula, cash conversion cycle. You put that here at inventory period 38.7. Okay, receivable period 33.5. Okay, and then account payable period 28.75. So you plus the inventory plus receivable minus account payable period. You get these answers. That means what? That means this measure the time between the cash payment to the supplier and the cash received from the customers. So here we know that the business is taking about 43 to 44 days, okay, to collect the cash from the sales itself.
Oh, so sir, so to find the cash conversion cycle, you have to follow these formulas, inventory period formula, receivable period formula, and then the next one, and then accounts payable period.
Yeah, correct. So you need to calculate one by one from the formula here.
Yeah, I have to go in the midterm test, they included everything in the formulas.
Yeah, correct. Okay, so that's the second question for your tutorial. Now let's go into the first question in your tutorial that will be relevant to your assignment itself. Okay. Now, so first of all, you look into a business called Bradley Limited. It's preparing a cash budget for the first quarter, January, February, and March of the year. It has forecasted. So you see, usually cash flow is about forecasting. You forecast the future, the upcoming months. Okay. So you have the sales for October, November, December, January, February, March, April. Although our focus is only January, February, and March, but sometimes you will need the information from the other months as well. First of all, Bradley Limited predicted that it may be able to sell 50% on the cash basis, 35% are collected in the following month, and 15% in the second month. So you see, you will receive some money in the subsequent months, not everything in 1 month itself. So this is why when you look into January, in January, you may incur some cash inflow from the past previous months. Okay, now first thing that I want you to know is you identify whether which one is cash inflow and which one is cash outflow first. For this one, we know that this is cash inflow because this is the income that's being earned by the business itself. Okay, now although we only look into January, February, and March, but later on we need to calculate because there are some money that we will be collecting back, okay, in that month itself from the sales that you made in the past months. Okay, now second, purchase will be 50% of the sales and is made 1 month before the sales and is made equally in the month before and the month itself. So purchase is your cost. So this is your cash outflow and you made 1 month 50% in 1 month before and 50% in the month itself. Okay, you need to calculate later on. Okay, wages are 20% of the month of the sales are paid in the month itself, and also sales and administration costs are 300,000 plus 5% of sales. All these later we are going to calculate, and these are all our cash outflow. So far, these three requires calculation. Why? Because the value are different across the months. Okay, requires calculation because values are different, okay, or may vary, okay, in months, in every month, okay, in every month. Okay, now after that you can see some fixed expenses. Your computer leasing payment 100,000 per month, okay, depreciation expense per year we ignore that, okay, loan payment 50,000 per month, we look into the monthly one, okay, and also insurance premium 10,000. All these monthly fixed payment, okay, is fixed. The value are fixed. No any calculation is needed. Okay, so therefore, we can call it as cash outflow, but the values are fixed. Okay, now then after that, okay, ending cash balance for December is 200,000. This is your ending cash balance for December, which is opening balance. That means this will be your opening balance in January. Okay, minimum cash balance required is 3 million. So mean to say, if the business run out of cash less than 3 million, then they will have to borrow money. Okay, they will have to borrow money. So therefore, this is the minimum cash balance required. Okay, now you have to prepare a cash budget. Before you prepare a cash budget, you will need to have all this information here, all the values, all the specific values here first. Okay, so we calculate one by one. We calculate the cash inflow from the sales first. Okay, so like I say, because the cash flow that you receive, okay, in that month will include some cash from the previous months. Okay, so therefore, we will need to look into November and December as well. For example, in November, your sales is 6,007. Okay, like we say, 50% you make in November, 35% you receive, okay, in December, and 15% you receive in January. Okay, so you see, you have some money you receive in January. Because our focus is only January, February, and March. Okay, same thing. For example, December, you receive 9,000, right? Okay, you make the 9,000 sales. Okay, so you receive the amount 50% in December, 35% in January, and 15% in February. Okay, same thing in January, you make a total sales of 7,000. Okay, so 50% you pay in January, 35% you pay in February, and 15% you make in March. February, you make 6,008, so you receive 50% here first, followed by 35% here, and then followed by the other 15%. But that one you can ignore already. Why? Because we only look into January, February, and March. Okay, March 2006, okay, 50% you receive in March and the rest in upcoming months. So now you can total up to find out the values for January, February, and the March. Okay, because our focus in these 3 months itself. This for cash inflow, the income that is the business is earning. Then you have cash outflow, the purchases. Purchases is 50% of the sales, and you made 1 month before and 1 month after the purchase. Okay, 1 month before the sales and in the month it sales. Okay, so for example, January, your sales is 7,000, 50% of the sales. Okay, 50% of the sales means 3,500. So you made 1 in December, 1 in January. Okay, 50%, 50%. In February, your sales is 6,008, 50% is 3,004. Okay, and you made the payment 1 in 1 month before, January, and 1 month on the month itself, February. Okay, same thing for March and April. You made 1 month before and 1 month on the month itself. Okay, then you total up for the 3 months that you look into. Okay, because you only look into January, February, and March. Okay. Now, after that, we look into wages and administration costs. Okay, so wages, we look into wages first. Wages is 20% of the sales, right? So you have the sales here, you just times 20% to get the value here. Okay, and we pay on the month itself. On the month itself, like January, you have to pay 1,004. Okay, February 1,360, and March is this amount. Okay. Then sales and administration costs. Okay, so all these costs are 300,000 plus 5% of the sales. Okay, 5% of the sales. So the sales in January is 7,000. Okay, you need to times the 5% of it. So let me write it here. In January, the sales is 7,000. 5% of it is how much? So let's calculate. 7,000, 5% of it is 350. Okay, plus the 300,000. Okay, remember all these are in thousand. Okay, so get 650. Okay, you do the same for February and March as well. Okay, now you have all this information that requires calculations already. Okay, then what's next is we can start to put into the cash budget itself. So this will be like what is required in your assignment as well. You need to plot a table for cash budget. Your cash budget will be like this. It is for few months, not only 1 month itself. Okay, so for example, you can do 1 month this month, and then the other 2 months the upcoming one. Okay, they forecast. Okay, you forecast. So usually 3 months, usually 6 months. Okay, 3 to 6 months, but usually you can just make it in 3 months. Okay, like this one that you see. Okay, so you have cash inflow and cash outflow. Okay, so you have January, February, and March. Okay, so we put that sales in. So all the sales that we calculated here, we can put that in. Okay, then cash payment. Okay, first of all, purchases, all this value. Okay, So all this value here. I also put up 2 sample tables in your Drive folder. You can have a look into the samples of how the cash flow are being drafted. Okay, now wages, we calculate this now for this amount. Okay, selling and administration costs, we calculated just now. Okay, then after that, fixed payment that we saw just now, all this. Okay, monthly fixed payment, we put that in. Okay, we put that in. So you see all these are fixed one. So when you look into your cash flow, probably their expenses are fixed as well. Okay, then you can have one row like this. So just now one row is cash inflow. You can put a color on that row. Okay, cash inflow. You can put a color here. Then you calculate your total cash outflow, another color here. Okay, put a color in your assignment. Okay, then you get your net cash flow. You can put another color here also. Okay, how you get net cash flow? You use this one minus of this one. Okay, so remember, net cash flow. Okay, net cash flow, you use inflow minus outflow. Okay, so you get the values here. Then you will need to have the bottom parts here. First of all, you must have beginning balance. Okay, beginning balance given by the question already, 200,000. Okay, now you add it up. This is your ending bank balance, right? Ending bank balance. But this is fall short, right? Because it is short of a bit. Because now you need 3 million for every month, but you're short of it. Okay, so therefore you need borrowing. So here it requires borrowing. Same thing as well. Like for example, during your interviewee, let's say he or she run out of money, run out of cash. Maybe you can propose borrowing. So here they propose borrowing to go back to the minimum balance 3 million. Okay, 3 million. Remember all in thousands. Okay, so therefore now they owing the money of 805 already. Okay, so now we can carry forward these 3,000 here, carry forward to February. Okay, so you calculate the ending balance for the February. Okay, you add up these two together. Okay, you get the ending bank balance. So now you get this ending bank balance ready, you can pay off the debts already. So you pay off the debts, you pay off these debts. Okay, you get this amount, 4,885. Okay, so this amount can be carried forward to the following months and then add up together. Okay, you get this ending bank balance. So this is the final answers then. The ending bank balance in March. Okay, so you can put a color here as well for this row. The ending balance. Okay, this will be your ending balance. So remember in your cash flow, I would like to have this opening balance, the opening balance and the ending balance, yeah. So this will be your ending balance. So you can have a look into the 2 samples that I uploaded in Drive, 2 samples of cash flow table in Drive. You can mirror that for your assignment purposes. Okay, so these are the tutorial questions for this week tutorial. Okay, now let's talk about assignment. So when you look into your assignment, it can be divided mainly into two big parts. Okay, part 1 and part 2. Okay, same thing when you do, you refer to a marking rubric as well. Okay, so the first one, 15 marks over here is actually your part 2. Your part 2 on your reflection.
So Mr. Sir, I have some questions about this. So I did this all by myself. As the individual assignment, I did this with the group and by myself. So like we have to only write the 50 report
and part 1, you need to write the analysis by yourself as well. Part 1, okay, is based on your interview. Okay, so this one is for part 2. Part 1 is these 2 parts here that carries 20 marks. Okay, let's talk about what you need to write. Okay, so part 1, what I expect is, okay, first of all, 1,500 words. Okay, demographic, I expect like, for example, quick intro. Okay, demographic as in the background of the interviewee. Okay, background of the interviewee. Okay, and then talk about, you can briefly talk about why it is relevant to build a cash flow, okay, for this person. Okay, later on, your purpose of your goals, okay, of doing the cash budget for the person. You can put it here as well to make it better. Okay, so you can add on this one, purpose or goals of doing the cash budget here. Okay, talk about the interviewee source of income. Okay, combine together lah. These two can combine together because it's about the interviewee. Okay, the interviewee. Okay, talk about whether it's from business or from working for people. What is the property investment? What is the allowance from children? What are the investment that the person has? Okay. Then you talk about the personal commitments and saving. Personal commitments and spending, the expenses lah. Okay, the expenses. Okay, then remember, this is where this part 1, you need to insert your cash flow budget as well. The cash flow table. Okay, the cash flow budget table. Okay, you insert somewhere here in part 1. Okay, so to show the cash inflow, cash outflow, all right, cash flow table. Then you can talk about what is this person's financial goals. Maybe like, for example, to retire at the age of 50, for example, like retirement early, retire at 55, for example, okay? Or you can talk about like maybe the person wants to achieve financial freedom, for example. Okay, comment about it. Okay, then here you talk about any relevant issue related to the construction of the cash budget. When you conduct this table, when you draft this table, any problem that you encounter, probably, yeah, like for example, lack of information. For example, you talk about lack of information. People do not want to share too much of the details because of the privacy. Okay, identify one issue or problem related to the cash budget generated and one solution. So you look into the budget, you see what's the problem that the person is having. Example like what? Example can be like too high of commitment, too high of loan, okay, spending too much on luxury, no investment, yada yada, and so on. Be creative on all this. Okay, then you give solution. What solution then? Okay, like for example, if the person no investment, maybe you can propose like what kind of investment that's suitable. Maybe any suitable investment. Okay, maybe cut down certain expenses and so on. Okay, so these are the things that that is based on your analysis already. So you can see that these two are on your own already. The front parts you can still share with your group mates. the front parts and the table. The table you can share as well. So you see, if I put a color here, the front part, all these demographic, sources of info, personal commitment, financial goals of the interviewee, and this table you can share among group mates. Okay, but after that, the last two you need to write by your own already. Okay, by your own. Okay, be specific. That these two carry marks. Okay, be specific. Okay. Then after that, we can go to part.
Regarding those points. Of the 1,500 points, what's the percentage of the whole? Because you said.
Depends on how you draft your work. Then as long as it's within 1,005, I'm fine. But because it's quite it's quite important, so you can spend more words over there. You know, you can see that in the mark scheme, right, they allocate quite a portion here. Like for example, identify the problem of constructing the budget, critically critically provide a problem statement, okay, and then provide a solution to solve the problem and recognize the consequences. So you can see the weightage are quite high for those components, so you can spend more words on that. Yeah, so same thing, like when you talk about proposed solution, you comment for solution. I want you to comment like when you propose all these solution already, what are the consequences and what could be the limitation. I want these two, so it can show that you have some sort of critical thinking. You talk about consequences and limitations. Okay, the limitations of your solution. Okay. Yes. Yeah. You want to ask me something?
Yeah. So, like I have one more. I just like it's in total 1,000 words. And then this, the last two that you have mentioned, it has to be specific in individual. And then
the one you can share the members. You can share the info among the members.
Yeah.
But of course, you don't go and cut and paste the entire paragraph from your friends. Because it will affect your turn-in similarity, right?
Yeah.
So info can be the same, but you don't cut and paste the whole paragraph inside.
I just get information ChatGPT gathering and I don't write what they say.
Okay.
I don't write, but I just see and then don't write the same as the AI.
Okay. Yeah.
Because otherwise AI will be very hard.
Yes. It's already ready. I don't know when she's going to release. Yeah, the midterm marks are ready already. But wait for her to release. I think you don't need to wait for her. Yeah. Okay, now second part. Okay, second part is 500 words. Okay, this is about reflection. Now, this is what I can give very generous marks. Okay, so if you can, I can be generous in giving marks for number 2. Okay, this is about reflection. Okay, so you talk about what you learned. Okay, let me give you an example. Okay, this is about reflection. Example. Okay. First one. Okay, reflection is talking about what you learned. This is something you can talk on. Okay, so first 1 to 2 paragraph, you can talk about your progress. You know, like first 1 to 2 paragraph, you talk about the progress of doing this assignment. Like for example, what are the challenges that you face with your group mates? Okay, be specific. But of course, don't be like storytelling lah. Like for example, I got kicked out by the member, and then I find another group. I go to library to borrow books. No, be specific. Challenges that you face, like for example, miscommunication. Like for example, the synergy among the group members. What are the challenges faced? Okay, how you solve. Something like that. Okay, keep it concise. 1 to 2 paragraph on it for the first part here. Okay, you talk about your progress of the assignment and the challenges faced and how you solve. How you solve. Okay, how to settle. You got kicked out. How? Okay, so talk about that. 2 paragraph, 1 to 2. Okay, then you talk about what you learned specifically. What can you learn from this assignment? Financial literacy, maybe financial literacy. Okay, then be specific. What kind of financial literacy you learn here? Okay, so we put financial literacy as a heading. You can put a heading, very nice. I will give you marks. Okay, financial literacy. Okay, for example, you know how to do budgeting. How you do budgeting then? Remember, sometimes people say you can, once you earn the money, 60% for important one, 30% for what, and then 10% for what. You know, like the rules. Let's say, for example, you learn that once you earn the income, you can allocate the money like this. For example, okay, what you learn. Okay, you talk about this, how you budget. Okay, or you can talk about the importance of budgeting. Be specific. One paragraph. Okay, one paragraph. One paragraph. Okay, then continue. What else you can learn? Maybe problem solving skill. Problem solving skill. Maybe you learn problem solving skill. You help the interviewee to solve her problems. How you solve, and also you solve the problems in your group. How? Okay, so you talk about problem solving. You talk about that. Oh, you learn how to be impromptu. For example, you learn how to be impromptu. Okay. You learn how to be critical in terms of evaluating. One paragraph. You talk about what you learned. Okay, now whatever you write, right, I want to see one paragraph on self-independent learning. If you write that, I give you very high. Okay, I want you to say that you learn independent learning. You are very independent already after doing this assignment. Okay, so you must say one paragraph. I want to see independent learning. Okay, you write that you learn independent. You learn how you become independent. You do research, for example, you do research your own. Wow, very smart already. You do research, and then you go and look more information or finance books online. You learn yourself. You look for sources. Look for sources yourself. Okay. So one paragraph on this. I must see at least one paragraph independent learning. Okay, just now financial literacy and problem solving, up to you. I don't want everyone to write the same also. Later everyone write the same thing for reflection already. Okay, you go and write something different. But at least I want to have one paragraph to talk about independent learning. You become very independent. You solve the problem by yourself. When you don't know how to find the answers, you go online and look for the answers. Okay? Why? Because you see the mark scheme. You see the mark scheme here? You see, if I can see that you demonstrate an autonomy and continued commitment to learn independently in consistent manner using a self-directed learning activity, I can give very high already, outstanding. So this part 2 is the one that can be very generous. Okay, part 1 will be more difficult, but part 2 you can score. Okay, so therefore, this is what I want to see at least. You must show that you are independent.
Where's the cover sheet for this assignment?
No need cover sheet. Just use this one and then you put your name there. Just use this one and then put your name, ID, tutorial section. Okay.
Oh, name, ID, tutorial section. Okay.
Yeah. Okay. Then. Yeah. So your reflection. Okay. Make sure 500 words. Write concisely. Okay. At least I saw that how you do your work. Okay. How you solve the challenges. At least a few things that you learn, and one of it must be independent learning. Okay. So this draft is already provided for you.